Hello and welcome to this video. Today I'm going to be doing a stock analysis on Doordash. Now if you don't know what Doordash is, it is a food delivery service that delivers food from other companies, like say you want to order something from McDonald's but you want to stay in, or Burger King and a lot of local restaurants. The reason I want to highlight this today is because I recently just learned they are partnering with Klarna, the Swedish buy now pay later app, which I think is quite amazing, because just imagine how many people think ordering out takeout is too expensive. And when do you often do that? When you're lazy, when you're hungover, and you don't really think of the consequences that much, which means chances are you're going to be paying the same as you're going to be paying the same unless you miss your payment window. So you'll be paying the same, but not right now. So you might think, oh, it's late in the month, I haven't gotten paid yet, but hey, I can just pay it next month. And I think that is going to increase DoorDash revenue insanely much. Also, if you just take a look at the graph over the last few, let me just change that real quick. It is a not an all-time high. It has actually rebounded. As you can see, it started out incredibly high with the IPO at about, what was that? About 190, and then it quickly spiked and fell all the way down to 112 and spiked again, and then it sailed all the way down to this valley. As you can see, it was trading right down here for quite a while. So as you can see, it is a recently new stock on the stock exchange, but since then it has rebounded. And now, just given the fact that they have a large market share, they have 65 to 70% market share in the US, which is quite insane, just given the facts that they also are going to partner with Klarna now. I recently just bought this. It was about 2 hours ago. I just bought this stock, and I think it's going to be quite nice in the future. I like stocks that are the best in their market, because chances are they are going to be keep being the best, and they're going to have more cash to develop new stuff and keep being in front. Because imagine that they weren't the biggest, Klarna would not have partnered with them, but maybe would have with Uber Eats first. Right, now let's take a look at the company itself. And they also recently just joined the S&P 500, which means that chances are they're going to see a lot more volume these days. Now, as you can see, the company has a quite nice valuation at $83 billion, which is quite nice. And their earnings, as you can see, sometimes they make money, sometimes they lose money. As you can see, in the start of 2024, they lost money, and they actually lost more, 83% more and 300% more than were anticipated. Then we had the Q3, which was 88% above. And then we, of course, had this in Q4, which was, when was this date? That would have been on the 11th of February, and they were down by 2%, which isn't that bad. Now, they don't pay dividends at the moment, and as you can see why, it's probably because of this. As you can see, they don't make any proper money yet. Until this year is the first year they are properly profitable after investments. Or last year, I mean. So I think that's quite interesting. Also, when we see their next earnings report in about a month, I think it's going to be a bit higher. So I think it's going to be very, very nice. So yeah, I like it quite a lot. Now, if you take a look at the seasonals here, as you can see here, some years they perform quite nicely. As you can see here, 100%, 70%, 17% for this year alone, and 7% for 21. But as you can see, it is quite volatile. As you see, sometimes, like in 21, it was all the way up with 76% and then tanked all the way down again. And then 2020, it was down 24%. This was the year they launched. And then 22% where nobody made any proper stock gains. Now, if we take a look at the technical analysis here, you can see that for the month, it is a very strong buy here in the moving averages. It is a neutral in the oscillators, but overall, it is a buy. I personally like this a lot, and I think it is gonna increase quite a lot in value. Maybe not this year, but I just like the way that it works. So I am gonna keep this in my portfolio, and I'm gonna keep it for years. I think it's gonna be a great stock, and I might just purchase up more and more over the years, if as long as they keep their market share, or unless something else happens which makes these obsolete. Now, as you can see in the analyst rating, they are averaged up by 12%. Something it should be up by 25%, all the way up at 250. Something it should be at 225, that is the average, and something it should be 193. Now, as you can see, we have a ton of analyst ratings here on Doordash. It is one of the companies I've done analysis on where I've seen most of these. And it's quite interesting, because we see one sell, and then we have 14 hold, 4 buy, and 24 strong buy. Now, the reason I find that interesting is it is quite rare to have this many strong hold and no strong buy, and this many hold and no one in sell, but rarely one in sell and no one in strong sell. Quite often we see a lot in both strong sell and hold. We have people down here as well. And I think that's quite interesting. And I think it's nice because, of course, I own the stock, but I also think it is interesting that we have so many analyses. We have 34, and not a single one is a strong sell, which I think is quite interesting. You can also see down here in the annual earnings forecast, as you can see, they didn't make any money at all until 24, and now, as you can see, it is estimated to grow and grow and grow even more. So I think it's going to be very, very nice. Yeah, very, very interesting. As you can see here, they lost 3,000%, then 26%, 39%. So yeah, very, very interesting to say the least. So I like the company quite a lot. So yeah, my personal target for this with the year is about the same. Actually, I think it should be a bit higher. I think about 245 is decent. I know it's almost at the top. With this analyst rating was at 250. I think 245 is quite decent. Well, I think within 10 years this should be, maybe it'll do a split. I could imagine them doing a split to get more volume in. But I think in the next 7 or 8 years, this should be trading at roughly what would be $1,500, so 1,500. So I think they're gonna make splits meanwhile, because that is just quite common for stocks that are relatively new. That when they gain, then let's say this would be valued at 400, they would then do stock splits. I think that is gonna happen. This you can also see that a company like Nvidia has also had quite a lot of stock splits in the past. Now, if you did like this video, please don't forget to like and subscribe, and comment any other videos you want me to do a stock analysis on.